You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That funky tune means it's time once again for the Option Block, a little program we like to think is everyone's favorite bi-weekly source. I know it's mine. Hopefully it's yours. Bi-weekly source for all things options related. A little bit of analysis, a little bit of what's trading, a little bit of unusual activity, some of your listener mail, some strategy, some around-the-block peering. Mix it all together, and you have the tasty brew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 14 programs for you guys to choose from on the network, including our latest edition, This Week in Futures Options. As the name implies, that show breaks down what's happening, what's hot, what's cooking every week in the land of futures options. Maybe it's crude oil, maybe it's metals. Lately, it's been soybeans. Who would have thunk soybeans when we launched that show? But soybeans all over the place on that show as well. So check it out wherever you find your favorite Options Insider Radio Network programs, including, of course, the easiest place is the mothership, the flagship, theoptionsinsider.com. You can also find it iTunes, TuneIn, Stitcher, wherever you find your favorite podcast programs. Also available, of course, via our mobile app, which is out there on iOS and Android and pretty much all the major platforms. And joining me on the old show today, let's start in order of distance. Let's go all the way out to the Duchy, nay, the Principality of Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi, beaming in by way of the old Option Pit. Mr. Rock Lobster, welcome to the program, sir.
It is a pleasure and a privilege to be here on the Options Insider Radio Network once again.
Easy for you to say today, sir.
I had all kinds of alliteration going through my head. It got trapped on.
You've been hitting the lobster oil early today, sir. Is that what you've been up to out there?
You know,
you guys in Maine.
The fish are biting, and I'm looking at them, and
you're like, I want to be out there. I want to be doing anything else but talking some option block. Well, it's a good thing you're here.
That's how dedicated I
am. Speaking of dedicated, Uncle Mike Tussaw, not that dedicated because he decided to go on vacation. What kind of person does that to us, Mr. Rock Lobster? But we do have.
He's dead to us.
He is indeed. He is dead to us. But we do have an able stand-in in the form of a newcomer to the show. He is Todd Rich, the president of OM Media, and also spends a lot of time at a little place we like to call Options House. Todd, welcome to the Option Block program, sir.
It's I will agree. It's a pleasure to be here. Thanks for having me, Mark. and Andrew, I got it out without stuttering.
There you go. He's already ahead of you. It's the first time on the show, Andrew, and he's already crushing you.
Beginner's luck.
It helps that he's in studio. It helps a little bit. You know, I can kind of boost him with my presence. But Todd, this is your first time on the show and indeed on the network. So why don't you go ahead and give our listeners a little bit of an overview of your background in the option space, and then what it is you guys are up to these days over there in the land of OM Media / Options House.
Thanks, Mark. I would love to do that. I, like Andrew, was a long-time trader on the floors here in Chicago on the Chicago Board Options Exchange. Spent nearly a decade down there standing in the pits, waving my hands, buying and selling everything that you used to see in the movies, which no longer exists, unfortunately. It was a nice run while we had it. But in the early 2000s, I migrated off the floors and went to work for the exchanges, spending a bit of time with Eurex, which is a large futures exchange out of Frankfurt, Germany, and then more recently with the New York Stock Exchange, helping them out with a lot of their technology offerings. But a year ago, I moved over to Options House. It is an online retail broker-dealer. We're doing some great things over there, completely reinventing the place, coming out with some new technology, and we are the #1 retail brokerage platform for options traders.
We got 3 old school SIBO guys on the show today. Of course, Andrew also has a few forays in the P Coast and who knows, probably the Neolithic exchange somewhere out there trading rocks. But before we get into it, Todd, let's hit that a little bit because you mentioned you're kind of at OM Media, but you're also doing stuff with Options House. Why don't you kind of mention kind of that delineation, how that works, how you guys are kind of under one umbrella now, and kind of how all that's shaping up?
For sure. So we are affiliated entities. Options House is the broker-dealer. That's the platform, and that's the name that everyone knows it's externally as. But affiliated with that broker-dealer, we do have a research, analytics, market commentary, trade idea generation, trading tools media company, which we call OM Media for now. It was known as Option Monster, so some people might be familiar with the OM Media brand and what it is that we do, but we are turning that whole business unit around and turning it into a proper research, analytics, trade idea, organization to help the self-directed retail investor.
Yeah, I had a chance to play around with it a little bit since you and I have been talking, and it's kind of interesting what you guys are working on. We'll get to some of that in a little bit, but for now, let's dive right into our first segment. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. Bit of an interesting day. Kind of a couple of different themes, opening up kind of middle of the road, then kind of selling off a little bit, and then kind of getting a little bit of a lift at the end of the day. Most of the major indices up fractionally on the day, about a quarter of a percentage point or so, after S&P having about a 14 handle range on the day, so about 2x what we've been seeing of late out there. So a little bit more active day than it may have seemed on the surface, and of course with all this upside at the end of the day, VIX cash taking a little bit of a breather off about half a handle or so down to about 13 3/4 or so over there, or as Mr. your cohort hates to say, about 3.3%. Andrew, don't tell him I said that, because he'll just lose his mind. But that said, Mr. Rock Lobster, a lot cooking. We are of course heading into some interesting stuff later this week. We'll get to that, of course, in around the block. But let's start off there. Interesting day, kind of a little bit of back and forth, bit of a rally towards the end of the day. What caught your eye in today's activity, Mr. Rock Lobster?
I'm gonna query the group here while I have a chance. So Todd and Mark, but you guys are both market makers. Don't you remember volatility coming out after the announcements?
Yeah.
Instead of before the announcements?
I was just going to say the same thing. I can't remember the day where we saw like a half handle come out in VIX cash before like a big non-farms, let's say. It was always such a huge event, I don't know about you, Todd, but it does seem like a little bit of a strange play we see going on today.
Definitely something that you wouldn't normally expect to see.
It's all pre-sale. That's crazy.
Why would you want to own any vol going through something like the non-farms? Why? It makes no sense. Well, sell it. Sell it now.
We were looking at like in a vol product today. I was looking at a vol straddle, and we're talking in the chat room, and like, no, you'll have plenty of time to buy this. It's trading for 27 cents. It'll probably be there all day, and then until they, if they don't, they'll take the vol down tomorrow. And as I'm looking at it, you could have paid 20 cents for the strangle, expiring tomorrow, and now it's trading around 59 cents. And of course, I missed my own awesome trade. But it was, again, surprising that we would get so fast a reaction out of volatility for, I don't know. The way the vol is acting, the market wants to go up. I don't know why it wants to go up. Maybe because interest rates might normalize or whatever. I know we've talked long and hard about the confusion and delay caused by the Fed instead of just doing it and getting it over with. But I think that was to me the biggest story. Vol coming in prior to the announcement on a Thursday. The ADP, the payroll report was okay, and maybe we're just the we're just the best looking G7 country out there, and they're going to sell the vol and buy our stocks. And that was kind of the action of today. At least that was the big one that the thing that kind of stuck in my craw, I guess, at the end of the day.
A lot of things stick in your craw over there. You're a crotchety old New Englander now, sir. So it's you're a get off my lawn type of guy. But Todd, I know you've been busy running around and trying to get over here and setting up here for the show. So maybe you missed some of the latter portion of the day. But anything catching your eye in the morning or early afternoon? I know we were talking about Draghi before the show started, so maybe that was on your radar as well. What kind of caught your eye in today's activity?
Just like we saw a turnaround in the markets, I thought it was very interesting that we saw that turnaround in oil. I mean, just after OPEC had announced that they're not going to cap any of their production, we certainly saw a reaction with, hey, there's going to be a supply glut. Here comes the supply. You saw some pressure on oil. And for reasons that I can't quite figure out, their buyers stepped in, drove it all the way back to positive on the day. And it's even more bewildering is that I don't think we're really seeing that kind of demand for oil on the economic front with corporations. You know, they're moving their earnings expectations down. I see them consuming less oil or less energy, and yet there's still buyers in the market.
Yeah, it's kind of interesting to watch. You know, oil has kind of been an ever-evolving story for us here on the option block. You know, a better part of the last, I don't know, year and a half now is kind of when that sell-off seemed like it started October of the year before last. And so, yeah, the last 18 months or so, it's really, crude has been on our radar like never before, to the point where we launched a second show a few weeks ago talking about futures options, just because there's so much interest in crude, not just crude, obviously metals and now the beans and everything else, but it seemed to start with crude. We've been running this network for the better part of a decade now, and I can't recall the last time that we've been doing this. We've had so much interest, particularly even from the retail side in things like WTI, you know, not just USO, but WTI and all the other stuff. So to the point where you're right, crude has really seemed to penetrate. We talk a lot about crude skew on shows like Volatility Views now and this program as well. So crude kind of permeates a lot of things that we do here on the old network. And you're right, I was kind of mystified by today's activity as well. It seemed like in the activity we saw leading up to last week, there's a lot of put action, and the skew was still favoring the puts. It seemed like it was kind of set up maybe for a bit of a downside retracement. Started heading that way. And then you're right. Someone decided, no, this is a huge buying opportunity. Even though OPEC's not going to shut off the spigot, that means we just get to buy more. And so they just gobbled it all up. So you're right. It's kind of been interesting because for a long time, structurally out there in crude, we were watching people buy puts, 20% out of the money, going all the way out like a year, down to like the 30 handle, 25 handle, 20 handle, all the way out to the end of 2016. To the end of 2017, people there seemed like there were deep structural concerns with the crude market. And I don't know if that's abated. I mean, the skew has mitigated somewhat, as you'd expect, because the crude has gapped up a bit over the last couple of months. So you're going to see some evolution in the skew there. But still, it is kind of interesting, you're right, to see kind of today. I don't know, Andrew, were you one of those crude bulls out there? Were you gobbling up all the USO you could get today?
We actually looked at some upside time spreads, just because the vol now, I just think in individual names just getting really cheap. But I'm still in like the bizarro land where, bad news is good news and interest rates are going down and everybody buys stocks because the economy sucks. And, it's just, I don't know. I guess it's all, maybe everybody's pre-programmed now. We're pre-programmed that bad news is good news because that's what happens when you try to micromanage every piece of economic data that comes out. So, yeah, I actually think, it looks like 50 is a spot where oil wants to be. And while I'm not a excellent technical analyst by any stretch, I always believe in the law of sort of even numbers. And, for a while it was 25 and that kind of has gone by. And now it seems to be 50 and it wants to hover there. And trades that do well when oil hovers around 50, that was kind of the stuff we were looking at. But I'm sure there will be more. That's basically it. There's time spreads around some of the big energy producers and things like that. I don't expect a lot of huge rally, and I really don't expect them to fall apart anymore. And it's, because of days like this. If oil doesn't sell off on this news, what's it selling off on? Okay, we're going to keep the spigots running. and we rallied. So
it's going to rally on news like today. It's going to crash on the next fires in Canada or something. That's what's going to happen. It's completely contrarian now. Everything that's going on out there in Crude. But Todd, you raised an interesting point too. Like kind of this the interest in retail. I know you guys over there at Options House, kind of adding an FCM into the mix, getting a lot more into the future space. I'd imagine that's probably a result of what you guys are seeing as well from your kind of audience and your users. I imagine you guys are getting far more inquiries on the futures and futures options side than you were probably even 6 months or a year ago.
That is for sure, and I think it's rather interesting that you just said you've launched your own program into this space because there's demand for it. We did just launch our own FCM. I can't remember the last time somebody actually launched an FCM and wasn't shutting one down. Yeah. And over at Options House, we're seeing a lot of demand for access to those futures markets in the retail space, something you really haven't seen a lot of in the past. And clearly, we're trying to embrace it.
Yeah, it's been an interesting trend to kind of watch develop. And you're right, I have to look and see the numbers, but I can't imagine it's been probably quite some time since we've seen a new FCM join the fray. We've seen a couple close, not of their own volition, in recent years. But yeah, you're right, the number of FCMs opening, I'll have to look into that. It's kind of a good question.
Yeah, and what was even more interesting, I can give you a little perspective. The minute we relaunched our FCM, hundreds of accounts just opening them. People are flocking, looking for these kind of services in the retail space. So the retail public is definitely looking at the grains, the energies, the metals, and I actually think it's a good thing.
That was it. They were just waiting for you guys to add an FCM, and now the floodgates are open. You better get out of here and go work customer service. Go open those accounts. But before we get to that, it is, of course, that time of the month. Yes, it's beginning of the month. That's where we get the numbers for the month that was. From an overall options perspective. And it was a decent month, May, of course. Certainly when you compare in the window, it depends on time frame, obviously. It's all in the data. It's all about frame of reference. When you look back from May of last year, it was about a 4% increase, according to our friends over there at the OCC, about 308.5 million contracts or so. Year-to-date cleared volume over there at OCC also up about 4% from last year, with about 16.7, almost 16.8 million contracts. Looking at what's interesting for us, of course, the exchange-listed portion of that exchange-listed options volume, about 311 million contracts in May. That's 2% increase from May of last year. Year-to-date, overall options volume actually up about 3%, about 16.4 million contracts. Of course, if you start pairing to those numbers a little bit, it does get a little bit wonky. May was a little bit lighter from an ADV perspective. It was averaging about 15 million contracts over there in the listed option space. That's pretty good, but it's down from about 16.1 just a month previous, just in April, and about 15.4 million over there from May of 2015. So it really kind of depends, Todd, and Andrew, indeed, kind of what frame of reference you're looking at. But I know you said you're mentioning you're opening a lot of futures-oriented accounts. What kind of activity are you seeing from your traditional retail options guy right now over there at Option House? Are they kind of sitting on their hands? Are they waiting for the Fed? Or is this low volatility keeping them from writing options? Or are they really active? What are you seeing over there right now from your clientele?
We've actually seen a significant uptick in volume, in trade size. People have been embracing options. And we like that. I mean, we're out there trying to educate more customers and bring more retail folks into the space, and we're definitely starting to see that over at Options House with people, even with the low volatility market, trading more frequently and trading with larger size. So
you're putting a lie to the old claim that VIX under 15 and no broker can make money, huh? You guys are lighting it up over there. Futures. That's the secret sauce.
That's the future.
Futures are the future. Everything old is new again. In this case, quite literally. Speaking of things that are new, let's get right to it. A lot of new paper lighting it up today for us. So let's dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Like the name implies, this is indeed the portion of the show where we break down what's moving, what's shaking, what's rocking, what's rolling from an overall weird and sometimes just kind of the darker and shadier side of the options market. We're actually going to kick things off. We got a bit of a late edition. We have our usual 3 today, but listeners, we're going to give you a bonus edition. So we're going to have 4 here in the old odd block because we saw some late breaking paper out here in one of the Rock Lobster's favorite names. This is indeed a good old Xilinx, ticker symbol XLNX, closing today $47.12. And this name was lighting it up today. But this name also does, it averages about 5,000 contracts a day. So from an odd block perspective, fairly aggressive paper. Todd, we talk about a lot of names here on the show that do, they average like 300 contracts a day. So a name that averages 5,000 is lighting it up from an odd block perspective. Today, doing about 22,000. So that's really lightened it up today. And a lot of that coming in looks like some good old-fashioned upside. In particular, it was the weeklies. So expiring pretty soon, expiring tomorrow, actually. June 48 halves. Going up, total of looks like about 12,000 and change today. I don't have all the actual price. I know Mr. Rock Lobster, this one's been on your radar, so you've been catching this, but this goes back into the old, quite literal lottery ticket. Someone gobbling up looks like some upside here, Mr. Rock Lobster. Any stock going up with this, or is this just what it looks like on the surface?
I didn't see any stock going up. Just straight up purchasing.
So someone's buying some scratch-offs here.
Yeah. 12,000 of them.
12,000 of them. They closed the 19 at 25, so probably somewhere in the 20-cent range, I'd imagine, for these guys?
They actually paid 10 to 15 for a bunch. And then just paper snowballed. So you could buy the June, actually Sebastian was doing it. He was buying the June 47 calls and selling those at the end of the day.
So a lot of love here for some upside. I don't know. Yeah, this is quite literal. This thing needs to move about $1.30 for these things to even start making sense. And of course, a little more than that when you factor in that they were actually paying about 15 cents for these things. So yeah, this is an interesting paper. Again, late breaking. So we're getting people the hot late breaking action here in good old XLNX. But yeah, interesting stuff. We don't see a lot of weekly, or should really daily. This actually gets to an interesting trend. I know, Todd, we were talking this before the show about the ongoing. Used to be every week was expiration, and now SIBO has the Monday weeklies and the Wednesday weeklies, or they're coming with the Monday weeklies. We got people buying one-day options. I certainly don't envy you guys in the brokerage space now, where expiration is effectively every day of the week, or if it's not there, it's coming pretty soon.
Yeah, it seems to be heading that way, and no, that would not be fun. I do like the weeklies. I think the weeklies are fantastic products. But you're right. I'm a little curious about the Xilinx trade myself, to tell you the truth. I'm kind of curious if someone knows something. But
it does have that ring of it. Speaking of which, you were looking at some stuff, I know, before we started the show. You guys are kind of dipping your toes over there at actually in the monster arm into highlighting some of this stuff. So if listeners are interested in this kind of stuff, what can they check out while we're talking about this?
Oh, this is great, for sure. If you're looking to try to identify where there's some unusual options behavior, on our website, www.optionmonster.com, we have you can register for free. It doesn't cost anything. You just can put in your email and password. But we do have right on our homepage some unusual activity where we tend to see things that are looking bearish or things that are looking bullish, and what type of volume you would normally or traditionally see at that strike, and when something that goes up that is different, something to kind of call your attention to, and definitely something that you might want to take a look at.
Yeah, I know a lot of the brokers out there these days, unusual activity is a hot thing. We do a lot of it, but a lot of people like to get in that game because it's where the action is. People want to know what's going on, what's lighting it up. And speaking of what else is lighting it up, let's move on to some of our other names here in the old odd block. In particular, we got another one. We like our iShares ETFs here on the show, Todd. In particular, we got next up on the show. We go all over the world here on this segment. We're going to start off in the UK. In particular, the iShares MSCI UK Index ETF. Say that 5 times fast. It's EWU is the ticker, closing today, $16 and dime. This is the name that does a whopping 883 contracts a day, doing a little bit more than that, doing 26,431, about 15 to 1 calls over puts. That should give you some inkling of where our attention was drawn today. And in particular, most of that 24,000 and change came in one massive trade out here on the July 16th. Paper started lighting it up earlier this morning on one block over there on the Philly to the tune of about 10,400 paper buy-in for 55 cents. As the day went on, that volume more than doubled, to the tune of 24,000 and change, just size volume. A lot of that chasing bids all the way from 45 all the way up to 55 cents. Again, this is a name that does anemic volume at best, so this is size paper for this one. It is worthy of noting this is about 2x, almost exactly the open interest on this strike, about 12,800 open interest here. So clearly this is opening paper here. Didn't see any stock going up tied to this one. So again, a bit of a head scratcher here, Mr. Rock Lobster, not only from a size perspective, but also from a volume perspective. I know, Todd, this one's kind of catching your eye too here, Todd. So what caught your eye here on this one?
This is the only thing I can think of off the top of my head is this is a reaction to Draghi talking today, right? He got up there and he kind of muddled his way through it on some impromptu language, but he said they're expecting to see inflation and economic growth in the Eurozone and that he is done. That is it. He kind of drew the line in the sand. There will be no more help. And maybe it's with that you see people wanting to roll back into the Euro market.
I don't know, Mr. Rock Lobster, what's your take on that? We didn't see any stock going up with these, so it doesn't seem like there's any tie to this. It's not quite as near term as our friend buying the dailies out there in Xilinx, but still, this is a pretty bullish sentiment out here on what are effectively at the money now calls here in EW. You concur with that? You think it's our friend Draghi causing this upside call up? This guy was really chasing these calls for the better part of the day here.
Yeah, I think it's definitely bullish because it's the EU. I'm not EU. The United Kingdom. So it could be the Brexit vote. Somebody's trying to load up on it. I don't know if the EWU can even move 55 cents for them to make money on these calls. I guess it's possible, but I think it looks like, they're kind of buying them in July. They're sort of timing it with the Brexit vote. You got Draghi talking things up like everything is hunky-dory and sweet. And, somebody's piling into these calls. So it feels like that's what it could be. That is a huge move for that market. I don't think you haven't seen the north side of 17 in the EWU since November. Maybe it's just, it's just Europe is just super cheap, and relative to the U.S., it's looking okay if all their problems are magically whisked away by Professor Draghi over there. And I guess this, England stays in, and maybe you get a little extra gas, and all of a sudden you got something that might be worth something. Maybe they get a double out of it, but you need a pretty good rally in the EWU to make it happen.
Haven't we learned anything here from our recent history in the States that when you put a lot of stock in what these governmental economic officials are saying, that it ends up being, I think, rough roads for all involved. We have our Mr. Draghi popping up. We have Miss Yellen over here popping her head up every other week to inject a little dose of froth into the marketplace. So we'll see. Maybe, yeah, you're right. Maybe our friend here today he's bullish, all things Draghi was saying. Certainly when it comes to that in particular iShares ETF, he's loving himself some upside. Now we move from the realm of Britain all the way into looks like the retail realm as well, actually, with we haven't talked to Macys on this show. I don't know, it's been a long time, Mr. Rocklast. Maybe you recall it. I haven't talking about this one in quite some time. Of course, ticker symbol M, closing today. Decent day for good old Macys, $34.35, up about 4%, or about $1.32 on the day. It's the name that does about 13,000 contracts a day. So again, fairly decent volume from an odd block perspective, doing 58,000 today, about nearly 4-to-1 calls over puts. That again should give you some indication of what caught our eye. In particular, started this morning with 2 blocks going up on the Philly, starting with paper buying the July 34 calls, and then doing that about 5,000 times to start, and then turning around and selling the July 32 puts, doing that about 5,000 times as well. Total on the calls, let me make a little bit of a ratio, just actually one contract under 8,000 calls going up on the 34s and about 5,500 or so on the 32 puts. Doing the whole thing, at least the initial 5,000 lot, on for about a 12-cent debit. So again, our old friend here, the old bullish risk reversal, also saw about 380,000 shares going up as well. So again, looks like we got the old bullish risk reversal coming in with some short stock to go as well, creating what Mr. Rock Lobster, one of his favorite trades, the old ratio back spread. I always like to call them ratio. I don't know, Todd, do you guys you're doing a lot of education stuff over there now at OM Media. Do you guys like to say back spread and that's on front spread, or do you go more of the old traditional ratio and maybe reverse ratio? I like to pose this question to all newcomers here on the network. What's your flavor of the month? Because I hate front spread and back spread. I think they're the most confusing terms out there.
We actually take a different tact. We're trying to be a little bit more innovative in the way that we explain or teach different option strategies, and using some of those more traditional terms, or even trying to teach someone the more traditional way that's very boilerplate and very, I don't know, I want to say technical, or it doesn't necessarily resonate with the newer generation. And I have to say, it doesn't really matter how some of these things work. It's how would I actually use them? So we tend to teach to the concepts. So as opposed to giving someone a ratio spread, we'll actually call it, hey, if you want to do a bearish spread or a bullish spread, what's your sentiment on the stock? And then we teach different strategies around that, and we tend to not use the traditional nomenclature.
So you'll get their outlook, their kind of direction, their sentiment on whatever the underlying is, and you'll kind of start structuring things around that. Are you going to really bullish for 3 months, and hey, you want to buy a put, or bearish, or things like that?
Yeah, and then maybe work in a simple debit call spread or a debit put spread, or credit spreads for that matter, if they'd rather collect the premium. But the way that we tend to explain things, or the way that we tend to try to have our customers see it, interpret, it's what does this actually mean to me? So instead of telling someone to do a buy right, and generally you'll even maybe call it a covered call, we'll try to teach the concept of, hey, you own stock. Would you be willing to collect money today to sell it at a higher price? Maybe you put a GTC order in above to sell your stock higher if you were to see a profit. Why not collect money today to agree to sell it at a higher price? So again, it's teaching more around concepts and how to use the option strategies as opposed to using some of the old dated nomenclature.
I like that. I've often said here on the show that options can get a little bit arcane with their minutia sometimes, and sometimes it does need a little bit of a fresh approach to kind of shake things up. That said, Mr. Rock Lobster, what's your talk here? Not exactly a fresh approach, but I do love myself a nice bullish risk reversal, particularly with some stock. What's your thoughts here on this pretty sizable risk reversal going up here in Macys?
Yeah, I don't know if these are my favorite trades. But they're certainly good for the show because they're huge size.
Well, risk reversals are my favorite.
I like the risk reversal, but when you do it on the delta neutral ratio,
it does kind of eliminate some of the fun.
It does eliminate a lot of the fun. You do okay if the stock tanks. You're pretty good down to, I don't know, like $30 or something like that, which is okay. On the upside, you have some upside movement. So I don't know if the customer was rolling out of a big stock position into. It's one of those things where you're not quite sure what the whole deal was. Are they dumping their 380,000 shares, and they're moving into more leverage with calls and puts? It's hard to tell because when it's all after the trade goes up, you're net long 1,200 contracts. So obviously you're looking for a move. You're looking for it in July. And on Macys, I guess they sold off all the retailers. So I can see them looking for a bounce. It makes sense. But I don't know. I just feel like there's a better way to structure it than what they have right there. It seems like you're creating a tied to stock trade like this only if you have 380,000 shares to go. And you want to move into the options.
Yeah, Andrew, I wouldn't be surprised if that's what actually someone was probably doing. And this kind of goes back to when we were talking about oil. When oil was lower and I honestly was expecting to see some support in consumer-related stocks because consumers all of a sudden, we had a windfall. You know, the price of gasoline came down and all of a sudden we had some more disposable income. You'd think you would see that impacted into these consumer stocks. Instead, the consumer stocks have gotten killed. People aren't spending the money. You've seen the entire retail sector get hammered. And this could be someone capitulating who said, enough, I'm out of my Macys, but I still want to have some exposure in the event that, I'm dumping my shares at the bottom. Still give me something.
Yeah. That's the only thing that makes sense. Can you imagine doing that huge trade to tie up all that capital for some upside if it might go up? That is, I would say, Todd wins for the plausible explanation.
What fun is plausible?
Trade.
We don't do plausible here on the show. We do outlandish and extreme. Speaking of which, now that we've denigrated this guy's trade, he's going to have the old Men's Warehouse rule applies here, where the more we denigrate the trade, the more it's going to just light up in his favor, and he's going to be laughing all the way. How much did that Men's Warehouse guy make again? Oh God, it was some ridiculous number of millions of dollars.
Like $10 million bucks or something.
On that trade that we just laughed at, partially because of I think there was a tide element to that one. I think we just take a dim view of these tide trades, is what it is. We're old school in that sense, Mr. Rock.
But we did identify that as very improbable.
Yes, highly improbable. Yeah, no, everybody, even on the craps.
However, if you knew the stock was going to drop $20, it was a pretty good trade.
Yeah. Even on the craps table, the horn high-yo's got to hit once in a while, right? Or is, the hard 8. So if you just play those all day, not exactly long-term profitable scenarios, but once in a while, they can make you look like a king, and that's kind of what happened. Maybe our friend here in risk reversal land will feel that love as well. As we move on to our final name, a lot of M names today in the old odd block, Mr. Rock Lobster. We're going to close things out. Another name we haven't talked about in a while here, switching gears once again to the hotel sector, in particular Marriott International, ticker symbol MAR, closing today 68.5, up about $1.37 or about 2%. This is a name that does about 6,000 contracts a day, so again, fairly decent paper, doing about 15,000 today, so nearly 3x, about 14-1 calls over puts. Once again, that should give you some indication of where our eye was drawn, like the old eye of Sauron itself, to the July 70 calls. They started lighting it up this morning with about 4,000 going up. Paper buying them on sweeps pretty much across the board, starting off about 70 cents. As the day went on, a total of about 10,000 went up on that strike, a little more than 10,000. Again, they were chasing with sweeps kind of across the board. The first chunk went up over there on ARCA. Again, with our favorite tag there, Mr. Rock Lobster, price variation. If you're confused by those trade tags, look them up on our site. We have all that stuff out there. Some nice handy articles, even an episode of our Options Bootcamp show to explain that stuff for you. Of course, even though it's price variation, no stock going up with this bad boy. And of course, this guy having a good run. So these calls already looking pretty good, to the tune of, they went out $1.15 at $1.20. So that 70-cent kind certainly looking pretty good. I think you'd take a few of those, Mr. Rock Lobster, wouldn't you?
I would. I'll take, what is that, 60, 70% in one day on your huge cents, block of options?
Take 40 cents 10,000 times. You'd do that.
Yes. I had a floor birdie tell me that the crowd that took down the other side of that got run over, unfortunately, extremely fast. Which all three of us could say.
I was just going to say, this has all the hallmarks of leaving some tread marks on the crowd there at the same time. When it works out so aggressively for the customer, Todd, I see Todd laughing, so he knows our pain as well. When it works out so well for the customer, so instantly, you tend not to work out too well for a few guys out there. They were working their hedge, they were working their delta, they were maybe going over the old days, going to series, now doing wherever they go now on the upstairs desk, and then of course they got run over, and it's a painful day. Todd, you could tell us, were you some of these 10,000 coming in today?
It was all of them. Now, I'm still laughing at your I have Sauron reference, which was phenomenal.
Todd likes my literary pretensions here on the program.
But, yeah, I remember the days on the floor where you'd get run over like that, and it is not a fun day. Not a fun day at all for the guys on the floor taking the other side of that, providing liquidity.
But indeed, a fun day for the customer. So he's happy to the tune of about 40 odd cents on somewhere around 10,000 contracts. I don't know exactly all the prices he got, but still interesting stuff nonetheless. And of course, for us, that means it's time for us to keep on rolling right on into, it's Thursday. It means it's time for you guys to take the reins and fire off the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where you guys take the reins. Sometimes I regret that, but usually I don't. And you guys send in all kinds of great, many, and varied questions. No shortage of ways for you guys to do just that. Hit us up at the website, theoptionsinsider.com. All the social media is there. Of course, you can find us twitter.com/options, facebook.com/theoptionsinsider, and StockTwits. We are Options Insider over there as well, or the old-fashioned way, questions at theoptionsinsider.com, or all that's baked into the mobile app if you don't want to remember all that stuff as well. And, of course, for those of you streaming live, if you're quick-fingered, you can maybe get a few questions in now. Of course, we got a bunch queued up already here, so you got to be fast as we dive on in. Todd, do you have your question answering hat on here? We got a lot to get to here, sir.
All right, fire him at me.
Fire him at you. All right, here you go. You may regret saying that, sir. First up on the docket here, we got a question from Niles. He writes, are there any triple witching levels coming soon? If so, how do they influence the options market and expiration? Now, this is kind of a frequent offender here. We haven't answered this in a while. But people, I think it seems around this time of year, they start asking these kinds of questions all the time. They see this stuff bandied about a lot on, like, a CNBC or wherever they read it in the paper. And it used to be, back when we were on the floor, triple witching was kind of a big deal. It meant something, There was a lot of things expiring on that one day. It was a rare event. And now, kind of like we were alluding to at the top of the show, and I'd be curious to get your opinion on it, but from my perspective, it certainly seems like, we got every Friday is expiration day now. SIBO has added the Wednesday weeklies. Mondays are coming, so again, it's just a matter of time until Monday through Friday, there's an expiration. So even the notion of expiration Friday is going to be dated pretty soon. So when you have that, when you have expiration Monday and expiration Tuesday, does triple witching even really move the needle anymore over there in like a place like Option House, Todd, or kind of an antiquated concept?
I'm going to agree with you. I think it is a bit of an antiquated concept because it's such a common occurrence now, because we have these weekly expirations. But it's always good to know, when you've got your, quote, triple witching, and you've even got quadruple witching. But when you do have a lot happening on one particular day, it's nice to know what's going on across the different assets, the different asset classes. And it is remarkable how, if you see large open interest at a particular strike, and if you see it across different asset classes, it acts like a magnet. It really does, and you kind of, and of course we all know why. I mean, there's some natural buyers below the strike and some natural sellers above the strike, and it's gonna pull them in.
It's the inherent magnetism of options, Todd. I'm not sure if you understood that in your early education. There's a magnetic property
that and
to
my charming
all
personality.
Yes, it glues things to that strike. But I don't know, Andrew. You guys deal with a lot of retail over there, particularly in the mentoring and over there in the pit chat. Do you see a flurry of activity or interest in them around triple witching and quadruple witching, or do you kind of feel like those days are behind us as well?
I do feel they're behind us, mostly because I think folks roll a lot earlier than they used to. They just don't wait to get screwed on the last day. Oh, I got to get out of these 20,000 rolls, and I have 5 minutes to do it. I think, when that kind of came out in the 90s, like the late 90s, I think just people are, even institutional customers, are smarter, and they don't wait till the last minute anymore to try to unwind a position. So we generally tell, at least our clients, we recommend closing positions and closing short contracts and stuff like that. So, you can wait till the last day, and sometimes it might be worth it, but I think for the most part that it sounds great for TV, and probably the only people keeping it alive are CNBC, because it probably might boost ratings. Other than that,
I can kind of feel their pain. We don't go 24/7 here, obviously. If we did, we might be talking triple witching all the time too. You got to fill the airtime somehow, right? Oh, the looming triple witching. We put on the bottom of the screen, imminent, triple witching, imminent, and all the fun stuff.
The briefcase, yes. The triple witching briefcase.
I don't know, Todd, you must remember those days on the SIBO when Greenspan would be walking in, everyone would be Fed decision imminent, and everyone's watching the briefcase because you were bored out of your mind. Those were good and or interesting times.
Yeah, for those people who don't get the reference, it mattered whether his briefcase was nice and orderly and small, or whether it was overflowing and disheveled.
There was some ratio of per inch increased the probability of a rate hike by X%. Someone had it all worked out to a science. And I probably stood next to that guy because they were all crazy. All right, moving on. Good question here. Next up, we have a question from from Fred. He writes, I kind of hit a wall in my options development. Well, I'm sorry to hear that, Fred. He goes on to write, maybe my focus was too split between learning about futures and learning about options. Are you familiar with the books by Jim Dalton? He wrote a book about options trading, but he doesn't like the Greeks, and he doesn't like many conventional options trading strategies. He only uses them when necessary. I guess this is a long way to asking, when should I use options versus futures? Well, there's a lot here in this question. I'm not familiar with the Jim Dalton books. I'll have to check them out. If he doesn't like the Greeks, that's kind of interesting. I always thought they were kind of a fundamental component to at least understanding how options work. I mean, if you kind of go in without any knowledge of what delta and vega and theta are, you might be surprised on occasion by what happens with your options position. But it's kind of an appropriate question for you guys, Todd, too, because you guys, like you said at the top of the show, you guys are slinging accounts now as a result of having futures. So, A, are you familiar with this Jim Dalton and his books? And B, we've talked about this before. I'll give you a chance to weigh in on this time. When should he be using options versus futures?
So I don't know Jim Dalton, and for sure I'll take a look up at the book. I'll try to figure that one out and see what he has to say. But they're very different assets. You know, futures, there's some nice benefits to futures where it's a different regulatory structure. You don't have those day trading rules. You can, depending upon the margin, you can trade with a little less money in your account. But it's a purely directional play. Options is a whole nother story. Options, and I love options. I think people get intimidated by the Greeks, and again, if you went down to it, and I think the way most people teach the Greeks is they talk about it's applied mathematics, it's applied calculus. And if you start talking to someone about applied calculus and how to make the derivative and how the tangent at the curve and the area under the curve, people's eyes gloss over and it becomes useless to them. But again, how those Greeks are calculated is irrelevant. What do you do with them? Like delta itself is a great term to understand your risk. If you have something that's a 50 delta, you have 50% risk versus owning the underlying asset. So if you owned 100 shares of stock, or if you owned a 50 delta call, you have a 50% less risk in the call. It's very tangible for people to understand, or understanding it's the probability that option will finish in the money. So again, it's understanding the concepts behind them as opposed to getting caught up in the math that's underlying it or letting it intimidate you in another way.
I don't know, Andrew, you're very active, obviously, in the educational scene. Are you familiar with these books by Jim Dalton? And then I know you've talked about this before, kind of the breakdown of the use case options, a little bit longer term, futures more leaning on the intraday side of the spectrum. But if you have anything else to add there, feel free, sir.
Yeah, I mean, everything is, to me, margin, risk, and return. Futures give you the leverage, I think, for like shorter term trading. Options are more if you want to position and take advantage of volatility. I think options actually just to just day trade options, you probably do better with just the stock or the futures, just because for the in out. But if you're trying to create more nuanced positions or changing or trying to just buy a lot of reward potential for small dollars, options are a better way to do that. Obviously, we teach people how to structure that stuff in Option Pit. But they definitely have it sort of, you've got to match your apples to apples and your oranges to oranges. So you really have to figure out what you want to do first, and then one product or the other will fit better. If you're a Delta 1 trader, futures are going to be better. If you're looking, to me, to trade volatility, or you actually want a lot of extra leverage from the option, then those are the better choice. And understanding how that works, are the Greeks help you do that? I mean, I guess this particular guy didn't really like them. Maybe he didn't understand them. Although I like this one in the question from Fred. He says he only uses them when necessary. So I don't know what necessary means.
I guess when the market's gapping hard, delta suddenly becomes necessary.
And I have to cover my future position when I can't because I'm lock limit up and I'm screwed. I don't know what I could do. So, I don't know exactly what that is. He uses them for risk control. Certainly you could do that. So that's a good question. There's a lot of books out there by a lot of people. So it's okay to, but first you kind of got to figure out, like we've had other questions, what's your time commitment? What are you really trying to learn? Are you trying to make a living out of this? Is that really realistic? What are the things you're trying to get from options and futures? So you kind of got to ask yourself those questions first. And once you answer those questions, it's a lot easier to see how to proceed. That's what I would say.
All right, we got time for a couple more. I do like the notion here of he's got some sort of like the Greeks signal, maybe like a delta goes up, like the bat signal. Oh, time to use the Greeks. They're necessary.
Exactly.
And then he dives in. Otherwise, and I'm sure you have to subscribe to his service or something to figure out when the Greeks are necessary. But I do like that image in my mind of, the Greeks. The signal is up. All right, we got time for a couple more here. Let's see. We got a question here from Jack. He's coming out of far left field. He wants to know, too bad Tusa's in here is kind of our resident technician. I guess, Todd, you'll have to fill in on short notice. So prepare yourself, put on your technical analysis hat. Jack wants to know, have you ever used the PREM indicator, P-R-E-M? He says, it's for arbitrage traders. If so, how does it play out in the options market? I have denigrated technical analysis many times on this show, Todd, so I'm not the person to answer this question. I don't know. Are you familiar with the indicator at all?
Yeah, I'm going to say the person who should really answer this, who's I believe is an expert, is Andrew.
Oh, there we go. He's learning already. I like it. He is completely throwing you under the bus, sir. He has only been on one episode, and he's been on 500. It's impressive. So therefore, sir, the ball has tossed to you. You must speak on this PREM indicator.
What the heck? I have no clue what the PREM indicator is. And then the next thing is arbitraging what? You can arbitrage any. I mean, what the PREM indicator? All I can say is, Jack, I'm sorry. I don't know. And I do have clients that I would say are awesome technical guys, but they're more actually, I think they're just really good tape readers that I think not many people can do it well, but the people that do can. How does it play on the options market? I have no clue I'm even trying to look it up on Google, PREM indicator, and I haven't been able to find anything yet. So,
when in doubt, Google.
I'll try to find out the PREM indicator. I think premium must be short for premium.
It probably is some crazy structured product or an ETF or something, something crazy.
Yeah. Oh, the PREM A leading indicator, an indicator that works from Elite Trader. Oh, wow. Look at this. This thing really works.
Well, there you go. Now, as Andrew plunges into the thread there, down the rabbit hole of Elite Trader of this, so we got time. So we run up again. So we got time for one more quick one. How about this one from Trying to Make It? He or she writes, are there any good end-of-day options? Interesting question. That kind of space has evolved. We were just talking about on the Odd Block not that long ago. Someone buying effectively daily options. They were, one-day options to go on the upside. But I think he means more specifically in terms of some type of end-of-day product. I'm not sure how that would really work because we don't really have after-hours trading in options like we do in equities, where you can kind of have some sort of after-hours stuff. To my knowledge, Todd, I haven't seen any, nor do I know how one would exist outside of some sort of weird OTC construct. I don't know. Have you seen anything over there in your days at Option House, Todd, that will lead you to believe we're getting some crazy end-of-day products coming soon?
And nothing that I'm aware of from the brokerage side. I do recall some of the exchanges, some of the options exchanges were talking about trying to do after-hours trading for maybe an hour in the options, just to kind of go along with the equities. The equity markets are open for a while after hours, and people do have access. I mean, very thinly traded, wide bid-ask spreads in the after-hours trading, but it can be done. The question is would that be good in the option space? But to my knowledge, there's nothing available to the retail investor that I'm aware of.
Really quickly before we jump out of the segment, you mentioned after-hours options. One of our hot button issues on the show. I have to ask you then your thoughts. Are you pro or con, that sort of thing, adding like a little bit of after-hours trading for options, maybe around earnings, maybe some sort of limited pilot, or are you against the whole thing?
I'm going to reserve judgment. I'm going to be the ultimate politician.
Oh, that is no fun, sir.
Yeah. I mean, my biggest concern would be would there be liquidity, and would there would there be some bid-ask spreads that make sense? I'm not a big fan of having people trade dollar-wide markets in the options. It's just there becomes a silliness factor, and it's challenging enough to educate a retail investor and get them as a good customer in the equity option space that I don't want to throw them under the bus with something that that doesn't necessarily make sense.
Yeah, that's true. There are a lot of different sides to that. We've debated this endlessly on the show in the past, so we'll spare you from this is a longer debate than we have time for now. Let's keep on rolling instead into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we tell you what's on our radar. As we kind of alluded to at the top of the show, there's kind of one big thing on everyone's radar. That is indeed the non-farms coming out tomorrow. Kind of a bit of a head-scratcher as to why we're seeing such an exhale in the VIX cash land when we have such a big number coming out tomorrow. Particularly, this number has even more perhaps prominence than it would really even in a given cycle, just because Yellen's already come out and said they're looking at perhaps raising coming up very shortly here in June. So what this number says for us tomorrow could indeed cinch or perhaps kick down the curb the notion of a rate hike in a couple of weeks. So all that said, this seems to be a more important non-farm than we've seen in a little while, and yet people are selling vol into it willy-nilly. So that said, Mr. Rock Lobster, what's your take? What's on your radar for the rest of this week into the old weekend?
I think realistically, we come out of this non-farm payroll number, it's good. Besides the Brexit thing, if VIX gets, let's say, 13 or below, I think we could make all-time highs in a month if we get past the Brexit freakiness. Because look, Draghi declaring the financial crisis, kind of like we're done with our adjusting. It does, we've done what we could do. It's working. Yellen's raising rates. Everybody's like, oh, let's just, people are forgetting about, all the G7 debt and stuff like that. It could come back to bite us at some point in the future. But other than that, all of a sudden, you follow the signal. They're going to let volatility drop. Generally, that means we could see higher equity prices. So if we see a 12 handle in the VIX by the end of tomorrow, which I think would be really, really low, anything's possible. We could see surprise upside, and we could see new highs in the SPX again. It just feels like that's what the market wants to do. It bounces back on everything. They take the vol down, and if we didn't have this big vote from Great Britain coming around, anyway. I'm just going with the way that the charts say right now. Vol's going down and the market's going up on just about everything. So I for one, am not going to get in the way of that.
Todd, same question for you. Got non-farms, big number tomorrow. Talk about that and what else is on your radar here for the rest of the week into the weekend.
Well, there are a couple of folks from the Fed speaking tomorrow afternoon, and Yellen is even going to be saying some things on Monday. So, whenever she opens her mouth, you're never quite sure how the market's going to react.
She just can't wait to her own meeting in a couple of weeks. She has to start mouthing off already.
Hey, by the way, it's a good opportunity if people are looking for a place to know what's going on the optionmonster.com website, under our research lab tab, there is a calendars function, and it'll give you earnings that are coming up, any reports that are coming out, and some of these more interesting. A lot of people aren't aware that there's a couple of Fed speakers tomorrow, or that Yellen's speaking on Monday, and she used to be good for a nice 100-point sell-off in the Dow whenever she got up in front of a microphone, and the fact that now she speaks and the market rallies, I'm gonna almost have to agree with Andrew. I'm a little, whatever happened to sell in May and go away? Those folks actually kind of got hurt this year. They got to come back.
She's not going to allow that this year. All right, Todd, that theme means it's time to bring to a close this extra special, after-school special edition of the old Option Block program. But before we go one last time, let me check in with each of my cohorts here. my partners in crime on the old All-Star panel, see what they have cooking. You just kind of mentioned it, Andrew. He's learning this stuff pretty well. He's already got the plugs going. I like it. You're doing really well. You're learning. So since you mentioned the research tab, what else you guys working? What else are you cooking up over there in the land of Options Monster, as well as Option House, that may interest our listeners out there?
With Options House, we are going through a whole technology upgrade, which is always a fun and exciting project. But just to make our platform that more robust and user-friendly. And with Option Monster, we're looking for more ways to generate content for the retail customer, build some additional tools, and help people better navigate these troubled waters, these interesting waters.
Very troubled indeed. Speaking of troubled, we turn now to the Rock Lobster himself, Mr. Rock Lobster. Before you head out to hunt for those there lobsters out there as they just jump into your boat, what else is cooking in the land of the pit?
Well, the 11th of June, Saturday class, Condors and Flies. Again, for the price of an 8,110 lot, you can actually learn what makes those types of trades work and what makes those trades totally stink. So making sure that your outlet fits the position. So we stress that stuff, and that's our big thing. And then of course we're going to have our big option shindig in Chicago in July. So we might even get over to the Option Insider Radio Conglomerate building. I keep thinking there's going to be the guy, your logo with the big, with the antenna blasting.
He greets you at the door, and he hands you a nice shirt and a beverage. Todd's enjoying a nice frosty beverage. Mark's already picked over all my shirts, so we'll have to get some new ones.
I'm surprised you have any clothes or any beverages left.
Yeah, Mark's picked over a lot of my adult beverages as well, so we'll have to refresh all that fun stuff. And you got the webinar, you got flies and condors. No stupids? I'm out then. I'm out. No stupids, I'm out.
No, stupid's for another class.
Oh, okay, that's for another class. All right. So check them out over there in the land of OptionPit.com, as well as, of course, OptionMonster.com and Option House. Pick your poison, whichever you prefer. Maybe you want to open a futures account. You want to head on over there before everyone else beats you over there into OptionHouse.com. On behalf of Todd and Andrew and Uncle Mike, who couldn't be here but is with us in spirit, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. Of course, for sending in such great questions. Keep them coming. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.